What's going on, everybody? I'm your host, cryptocrane, and you are listening to the Sunday Night Hangout here on the Crypto Hangout Network. The time is 8:20, and we're going to talk some crypto today. And we're going to get started. We'll go ahead and kill the music and go ahead and get started now. So I hope everybody's having a good weekend. The month of October has rolled in. The weather is changing. The leaves on the trees are changing. Fall is coming in. And it's getting closer to the holiday season. So how's everybody doing out there in the Hangout gang? Hope everybody's doing fine. As I am doing great. The Cowboys won today. And so I am very, very happy about that. Okay. All right. So going to talk a little bit of crypto today with you guys. And, before we get started, I want you guys to go ahead and hit the subscribe channel and hit the like button and, hit the bell notification so you can get notified of the next video that gets started. All right. And thank you for hitting that because you are the real MVP that keeps this channel going. All right. So, yeah, to give you a round of applause for that right there. All right. We'd like to thank all our listeners and all our subscribers for subscribing to the channel. All right, so let's go ahead and get into some of this crypto news here we have here today. All right, so we're going to go ahead and get into the market movers. We have Bitcoin that is up here. We're going to look at the 7-day average today. So we have Bitcoin that's up 1.64%, Ethereum up 3.6%. We have BNB down 2.69%, XRP up 18.25%. And you have Cardano, that is up 0.59%. Solana up 3.16%. Dogecoin up 4.45%. Polkadot 5.02%. Polygon Matic 8.66%. Shiba Inu 0.30%. Tron 1.98%. Uniswap 7.14%. Avalanche 3.50%. Wrapped Bitcoin 1.77%. Leo 0.55, Litecoin 3.84, Atom 8.38, Chainlinks 7.37, Ethereum Classic down 0.09, Stellar up 6.77%, FTT up 0.12, Near Protocol up 1.93, CRO Chronos down 2.52%, XRM up 5.03%, Algorand down 4.87%, Bitcoin Cash up 1.89%, Terra Luna down Terra Classic Luna C down 7.9%. QNT Quant up 17.8%. Flow up 4.78%. VeChain 3.0%. ApeCoin 5.1%. Filecoin 1.1%. TON down 3.78%. ICP down 0.66%. HBAR up 6.38%. eGold up 15.53%, Tezos up 3.74%, Chiliz down 1.12%, Decentraland Mana up 2.3%, Sandbox up 3.25%, EOS up 1.51%, Aave up 2.43%, Theta up 1.66%, Axie Infinity up 1.43%, Bitcoin SV down 0.48%, and then OKB down 0.83%. So those right there are the market movers and shakers of the 7-day average. As you can see, and you got some coins in the green, some in the red. Majority of the coins here are in the green, as you can see. All right, so here next we're going to move over here to something new here that we, the crypto bubbles. So I want to show you guys the crypto bubbles here. So you can see XRP moved up 18%. And as you can see, these are also weekly bubbles. We can move here to the market cap. As market cap has went up at ETH 0.4%. USDT Tether, it stayed the same. ADA 0.1%. Sol 0.3.6%. And then BTC up 2.1%. All right. So that is the crypto bubbles market cap. And as you can see, the movers as we just went over on coin market cap. All right, so now let's look at the Bitcoin charts. Okay, let's see here. We have Bitcoin here. This is a Bitcoin 4-hour chart. As you can see, current price is $19,493.70, and it's looking stable. I suspect it to fall some more, but it's looking pretty stable as you can see right here. A little consolidation point right here up under this major ceiling right here. As you can see, it's still going on a little mini downward trend as well right here. So I expect more downside. The RSI is looking good. You may have a little pump up above here. If it does, I wouldn't suspect it to go above 19.8, maybe even 20,000. But I don't expect it to go above this right here. This last pump right here, which was $20,037. So I don't expect it to go up above that if we should have a pump, according to this right here. So what I would suspect it would do is come back up and set a lower high around in this area around here, and then fall back down for the rest of the week. Okay. All right. So let's take a look at the ES 500 mini futures, because as I told you before, Bitcoin follows that. As you can see, that fell, and that pushed the price action of Bitcoin down further with it as well. Okay. Let's see here. Let's check out Ethereum. This is Ethereum. As you can see, or it's the RSI is starting to come up toward overbought levels, as you can see. But I suspect it will do the same thing depending on what Bitcoin does. All right. So that is the charts. Okay. So you guys, wanted to talk to you guys about something about what's going on here in the markets and everything. We have a lot of people trying to find the safe place to put their currency into, but it's not, it's kind of hard during these times, as you see the housing bubble starting to crash. The not only that, you have the stock market falling and the cryptocurrency market's falling, but you have a lot of these markets, a lot of these things happening. But the one thing for sure is that I would not be caught in fiat. So that's what today's show is going to be about. We're going to show you some things that's going on with these markets. We're going to read some news. We're going to have some SEC regulatory news enforcement, and some, as usual, go into the Twitter news, and then we'll go into the we'll finish the show out. All right. So let's go here. We'll start off with the news. So SEC is starting to try to crack down on this enforcement as far as the celebrity goes and the pushing of the cryptocurrencies. You can see that the first one that Gary Gensler, the Grinch, as I call him, has been touting has been the Kim Kardashian, the whole Kim Kardashian thing that's going on. As you can see, I know it says Kim Kardashian agreed to pay the SEC $1.3 million, which is a warning shot from the watchdog for crypto promoting celebrities. So let's go ahead and dive into this article. All right, several crypto promoting celebrities may have been watching nervously this week as Kim Kardashian settled with the Securities and Exchange Commission over undisclosed payments for promoting a token on Instagram accounts. Kardashian agreed Monday to pay the SEC $1.26 million to settle an ongoing investigation into her promotion on the Ethereum Max token. The reality TV star failed to disclose that she was paid $250,000 to publish a June 2021 Instagram story shilling EMAX, a token with a market cap of just $11.7 million that bears no relation to Ethereum. The reality star and influencer ran afoul of the 1930 security law that says people touting investments must disclose if they're paid to do so, and say specifically how much they were paid. Now, this is something that I try to tell you guys all the time. If you watch my channel, if you watch me, if you know anything about the Crypto Hangout network or the Sunday Night Hangout show, we tell you that research is paramount. That research is a must, okay? Let me look into the camera so you guys can look at me. Research is a must, all right? Don't go off of what anybody's word. Don't even go off of my word, okay? But do your own research. You have to do your own research. That is the thing that a lot of people are not doing. They're not doing the research. They are just going off of people's word, okay? And then when they do that, they get upset. When a rug pull happens, or if they lose money, they lose out or on their life savings or something. Okay, so you guys you absolutely have to do your own research along with with the YouTubers that you're watching or the friends that are telling you these different things. Okay, so that just want to let you guys know about that. And the whole Kardashian thing is something that is big as far as Gary Gensler and the SEC goes. They were looking for something to put him in the spotlight because whole thing is he's trying to replace Janet Yellen as the Treasury Secretary. All right. And so, he has a bad name because of the whole SRP thing fiasco. Congress and the public doesn't trust him. So he's trying to show that he can, protect investors because the whole XRP fiasco. He's been accused of harming investors more than he has protected them. Okay. So let's finish. This case is a reminder that when celebrities or influencers endorse investment opportunities, including crypto asset securities, it doesn't mean that those investment products are right for all investors, she said. Ms. Kardashian's case also serves as a reminder to celebrities and others that the law requires them to disclose to the public when and how much they are paid to promote investing in securities. Kardashian isn't the only celebrity who has been rebuked for promoting EMAX. All right. And you had Floyd Mayweather, Paul Pierce, as well as her. Okay. And as it says here, after they promoted it dropped in 98% value. All right. So that was a guaranteed rug pull. For those of you that don't know what a rug pull is, all right, that was a guaranteed rug pull. Okay. So now, we have Do Kwon and the whole Terra Luna thing. And so we'll have to pull that up real quick. I had this set up, but my ad, came back up on it. So I apologize to you guys for that in advance. All right, so see here, 6 minutes.
Kind of talking about this.
I want you to listen to the regulation about what this lady is saying right here, okay? She's talking about the regulation that the United States is going to bring. All right, we just heard some regulation about it when it came to Kim Kardashian. Okay, and so now you're going to hear some more about the regulation and when it's actually going to come down and if it's going to be heavy-handed or not, etc. All right, so I wanted to play some of this so you guys can get a kind of an understanding of what the government is kind of thinking about when it comes to regulating this crypto market. To help you guys better, help you the Hangout gang better to invest in the cryptos.
Expect anything substantial coming from Congress next year.
Rulemaking at the federal level takes a lot longer, and they want to get it right. And I think there's been a lot of critique from industry that the present clarity that industry so desperately is looking for, because there's a lot of actors in the space that want to be regulated, that want to do this the right way, that want to build, a business of.
And this is very much true. Ripple was one of them. They reached out to the SEC to try to get clarity. They tried to see, what rules and regulations will be coming down, what they could do and what they couldn't do, so they could, be square in the SEC eyes and in the government's eyes. But they chose a regulation by enforcement type of approach. And that's why Gary Gensler is the Grinch.
Trust and compliance, and they're just lacking the clarity on how to accomplish that. And I think that they're sort of taking issue with the fact that what the SEC seems to be doing is regulating by enforcement. And I think that what the industry is really looking for is not regulation by enforcement, but really clear guidance. And I just think that takes a while, particularly when you have jurisdiction split in the US at a federal level between the CFTC and the SEC.
You're based in Canada. Can you talk a little bit about what the regulatory guidelines look like?
And I apologize, you guys. I had the mic muted, so let me repeat what I said. What she had just said, following up with what she said about how the CFTC and the SEC, both are splitting the regulation of crypto. It really needs to, in my opinion, and the opinion of that we hold here at the Crypto Hangout Network and on the Sunday Night Hangout, is that the CFTC should be the official ones that regulates crypto, not the SEC. The SEC should stick to securities and exchange and the stock market. Okay, the CFTC should decide which cryptos should fall up under the SEC's guideline and securities, and then they should move that over to the SEC and allow them to take over and regulate those cryptos. But as far as making that decision, that needs to come through the CFTC first and then hand it over to the the SEC. Okay, and but that is the reason why Gary Gensler made the play with XRP, for two reasons. For one, to try to corner over the crypto market from the CFTC and say that it all falls up under the SEC, which is bullshit, baloney. And then the other reason for it was to give JP Morgan Chase and JP Morgan Chase and Wall Street and the banks a chance to catch up to the public blockchain companies that are far ahead of them. Okay, and allow them to figure out a way to take over the crypto market and corner the crypto market, which they are trying to do currently through Ethereum, and that is for a later show. Maybe next Sunday, 2 Sundays from now, maybe 3 Sundays from now, but it's a show that we are working on currently, and it is something that is going to be big. It's something that I think that the public and my listeners and viewers need to know and need to hear. Okay, so back to the video.
There, especially in the wake of some of.
Well, there's another section in this video. I think it was right here at the 5-minute mark where she talks to as well.
At this time.
Yeah, you mentioned the bit license in New York, and I think there's been some critique from crypto businesses over that.
And what he's asking her is do you see that the federal regulations taking some of the guidelines from some of these the state regulations that the states are implementing as far as crypto? And this is her answer.
Law, but at the same time, it's probably among the strongest crypto regulation we have in the U.S., and it kind of informed what's happening in California.
Clarity on the characterization of some of these crypto assets. We've seen the recent Ripple, the summary judgment motion, and I think that's going to be really, really elucidating from what is this an investment contract? Is this a security? So
and that is the main reason why the SEC in Ripple case is so important for the crypto markets, okay? Because the clarity that it will provide for future blockchain companies and crypto companies will be paramount, okay? And that is why the SEC does not want to, under Gary Gensler, does not want to provide that clarity, because they want to be able to go after every company and make a name for itself and to, regulate and enforce, because he wants that job for that Janet Yellen will leave, depending on who's president. So that he wants to be the next Treasury Secretary. All right, so now we have some more Bitcoin news, right? We have the Bitcoin Policy Institute calls on U.S. to reject its central bank digital currency. Now, if you are a part of the Hangout gang, you know why the CBDCs are bad for you and me. You understand that they are a privacy issue. You also understand that the CBDCs allow total control through your currency and control of your money and finances. All right. So let's see what this article says right here. It says the BPI, which is the Bitcoin Policy Institute, has released a report detailing why the U.S. should not create a digital bank currency and should instead promote freedom and privacy. Okay, the BPI begins by exploring the strong possibility of the 21st century being known as the Chinese century. As I tell you, every nation in the world wants to go to that Chinese social system, okay? And that is something that is bad for a free-loving people, okay, that want to prosper. In reference to the authoritarian use of China's CBDC and other military, economic, and cultural hegemony. Thus, as more nations have started to develop and release their own versions of CBDCs, it is becoming increasingly clear that governments are vying to not only hold their authority over legacy finance, but seek an altogether new level of power. People today can only transact at the pleasure of the state via banks who deploy police power as quasi-state institutional, reads the report. Therefore, BPI calls on the U.S. government and central banking regime to pursue a new path forward, a path that empowers privacy and enhances freedom. As the world goes away from China in the 21st century, the United States should stand for something different. To stand for freedom, the release said. For this reason, the United States should reject central bank digital currencies. And I agree. If you want freedom, if you want privacy, then you don't want to mess with the central bank backed digital currency. Okay. All right. Now, there's something else that has been going on that people have not really been talking about. Okay. There is a crash that I've been telling people that's going to be coming for, it's on the horizon. People have not been saying things about it. People have not been talking about it. It is just my opinion. But, we tend to be right more times than we tend to be wrong, right? Just a little bit, some find it funny, but it's okay. We know. We like to laugh at them as they're laughing at us back. So, but just so you guys know that I am not, my thoughts or my information is not valid or whatnot. I wanted to show you something here that I came across that kind of validates what I'm saying and what I think. So let's see right here. It says the market crash Americans aren't seeing. Really? Okay, now this came out September 23rd, and I've been telling you guys for at least a good 3 weeks now that, maybe a month, that there's going to be another crash on the horizon. And when it comes, it's going to be the last one, the final one. And then you're going to see the crypto markets explode. You're going to see the precious metal markets explode. You're going to see both of those two markets explode through the roof. New all-time highs and everything. All right? Especially those coins that have a ton of utility. Okay? You will definitely see that. Definitely. Now, when you, let's see here. Let's see. So, it says as much as stocks are falling, moves in another financial market have even more profound implications for the global economy. Bearish sentiment has overtaken Wall Street, and just about the only good news that comes from Friday's trading session was that the Dow Jones Industrial Average and NASDAQ bounced off the worst levels of the day to finish above the worst of the year back in June. As important as stock markets are, they're not the only financial markets that investors should pay attention to. Indeed, the Federal Reserve's aggressive interest rate increase have also made big ripples in the foreign exchange markets. And the moves there have shown the impact that higher interest rates for the U.S. assets have had on currencies of other nations around the world. And that is true. Now, later on, we're going to get into some articles that show you exactly the impact that is happening on other currencies and why it is having. We'll get into a little bit why that is so. Okay. It says that has both good and bad news for U.S. investors and consumers, depending on exactly what your portfolio and personal financial exposure to foreign markets happen to be. Okay. All right. So it goes in here. It says the value of the euro last week fell 1.5% today alone, dropping below 97 cents and hitting lows not seen in roughly 20 years. The British pound saw even steeper declines, plunging 3.5% to $1.08. Okay, and that was the biggest daily move since the volatility began with the COVID pandemic. Also, the Japanese yen has been struggling of late, with the dollar recently fetching 146 yen, its highest since 1998. The move downward in recent months has been so severe that the Japanese central bank intervened on the foreign exchange market for the first time in 24 years to try to slow the pace of the drop. All right. Now, I have been saying this for a long time, that fiat money is going to crash, and that is part of the Great Reset. You can't have a Great Reset if you can't crash the current currencies to bring in the reset, right? So that is why you're seeing all this. Pretty soon you're going to see a bank run. Now, I've been telling people this for weeks, for months, that me personally, I don't keep my money in the bank except for enough for me to pay the bills. So when a bank run happens, I'll be okay. All right. So, not financial advice, not financial advisor. Like I said, this is all strictly my opinion and just going off of the research that I have done, something that of what I'm doing. You don't have to do it. I'm not telling you to do it. I'm just putting you out there what I personally do myself. Okay. All right. So what does this mean for U.S. stocks? It says, and the same, remember what I told you guys, the Bitcoin and cryptocurrency is following the stock market, right? The ES 500 mini futures. That's exactly what it's following. This right here. Boom. Right? ES mini futures. So let's see exactly what it is that they are saying that it means for the stocks as well as cryptocurrencies. A strong dollar is great news for U.S. companies that rely on importing materials and then primarily sell finished products to U.S. consumers. Better exchange rates reduce the import costs and bolster margins. Unfortunately, the reverse is true for U.S. companies with extensive operations abroad. The revenue that a multinational generates from a country whose currency is weak translates into fewer U.S. dollars, weighing on sales growth and profitability. One extreme example is Philip Morris International, which relies pretty much entirely on non-U.S. sources for its international tobacco business. However, plenty of other consumer giants do considerable amounts of business abroad and can see pressure on their earnings from the strong dollar. Right? It goes into a chart, and it says, in the midst of significant stock market declines, it's easy to miss just how important the extreme volatility in foreign exchange markets could be. With Europe still under pressure from Russia's invasion of Ukraine and supply chain issues plaguing global trade, any vulnerability in currency markets could lead to unexpected systematic disruptions if conditions don't improve soon. All right. So I just wanted to bring this to you right here about the market crash Americans aren't seeing. And if the stock markets crash, all right, guess what's going to crash next? Guess what's going to follow the stock market crash? You got it, crypto. That is what is going to follow. That is what's going to follow the crash. So, hence, another crash is coming. Prepare yourself. All right. It'll be a great opportunity for you to scoop up cryptos even cheaper than what they are. All right. But I have a feeling that you will have to use an exchange and set up stop losses in order to get those gains. All right. Scoop up those cryptos at those cheaper prices. All right. Now, before we go on, just want to let you guys know as well, as you can see on the infographic and below, you can catch this replay here on the Spotify network, on the Pandora network, on the Amazon Music Alexa, and on Sirius XM Radio, as well as our other show, the Meta Spot, where we talk nothing but exclusively metaverse. All right. Okay, so back on to the news. All right. So now we just heard of them about a crash coming, and that Americans aren't aware of. And now I want to talk to you about the continued bear market. Okay. So it says Fed fueled crypto bear market could last 12 to 18 more months, Solana co-founder says. Now, why does it say that the Fed fueled crypto bear market? Now, that is because the Fed is crashing the markets by having a strong dollar. They are making the dollar strong, and in turn, it is crashing all the markets, the crypto markets and the stock markets, all right? Because they are pumping the dollar, okay? So it says, it's been a few rough months for crypto following the collapse of Terra in May, sending shockwaves throughout the wider market. Crypto prices have been trickling down from months at that point, and financial markets across the board have been hit hard this year as inflation rises. So how much longer will the bull market last? Estimates vary widely, but many in the crypto space don't believe we'll see another bull run anytime soon. Now I'm actually against that because I think that once all these currencies crashes, people are going to be looking to putting their money into something that's more stable and safe, and it's going to be crypto. So I am of that opinion. Okay, and once that happens, then you'll see a bull market like you've never seen one before, because you're going to see a ton of money flooding in and running into it because fiat's going to crash, and the stock market is still going to be down low. Okay, and you see other companies, manufacturing countries such as Russia, et cetera, and China, et cetera, starting to use cryptocurrency as payment for their goods and services. All right. So it says in the latest episode on the Crips podcast, Yokovinko pointed to continued pain in the markets for some time to come, citing the impact of the U.S. Federal Reserve's ongoing rate hikes. But Yokovinko also told co-host Dan Roberts and Stacey Elliott that he's optimistic about an eventual return to crypto market growth. Looking at macro stuff, my guess is there's probability 12 to 18 months more of this brutal Fed rates going up, he said. But there is an end to it, and just like the last bear market, a lot of teams that build and focus on product market fit and really tried to build amazing products, a lot of those succeeded, I think, in a very dramatic way. I agree with them as well. Those companies that are building will come out on this on top. I definitely agree. I just don't agree about the whole 12 to 18 more months of bear market. Okay, don't agree with that. Now, I also wanted to include this in here to you guys as well, just so you guys can see the how get a realistic view of what the economy is looking like for the average day American. Okay, it says the Heritage Institute this is from the heritage.org. Americans have lost $4,200 in annual income under the Biden administration. Right. It says Heritage experts calculated the shocking number based on different sets of data. Consumer prices have risen 12.7% since January 2021, significantly faster than wages. So the average American worker has lost $3,000 in annual purchasing power. Right? Now, just imagine it if 2 years ago you put your money into crypto, and it back when Bitcoin was $6,000 and it's still $20,000, you're still up on that right now. Okay, you could deal with the inflation because you had put your money into crypto, and it's still panned out for you and balanced out for you. All right, now it says right here, simply put, working Americans are $4,200 poorer today than when Biden took office. This financial catastrophe for American families is the direct result of a president and Congress addicted to spending our money, combined with the Federal Reserve complacently enabling this addiction by printing more dollars. Washington recklessly spent trillions of dollars it did not have and paid for it with newly printed money, causing rampant inflation that has destroyed people's purchasing power and jeopardized America's financial futures. Instead of correcting course over a year ago when inflation began rising, the Biden administration and Congress continued the prolificate spending spree, and the Fed let the printing presses roll. Many Americans have taken on additional debt to cope with higher living costs. Now the Fed is finally fighting inflation, which is pushing up interest rates and increasing financial costs. Rates on all kinds of consumer debt are rising. Mortgage interest rates have doubled since Biden took office, greatly increasing Americans' monthly payments. We are in a vicious spiral, but it's one of Joe Biden, the Democrat-controlled Congress, and the Fed's own making. All right, and I agree. All right, I agree. Like I told you guys, last November that it was going to start happening and get bad. Okay, I told you guys that. So those that took heed and paid attention, kudos to you. All right. Now, we're going to do something different today. We're going to start a new segment, and it's going to actually be called we're going to highlight artists. Okay, so. The new segment that we have is going to be highlighting artists, and we have an artist that we're going to highlight today. And so we have the drum roll going for her, and it is Miss Jasmine Bryant. Okay, and I'm going to pull up, and we're going to highlight her artwork and her page, and everything that she has. Okay, so just one moment, we'll go ahead and move to that. And as you can see, this is, you can go right here on her, this is on her link tree, right? And we'll go ahead and get to some of her work. This is her website right here, artvibesonly.net. Okay, and she has some pretty dope artwork, as you can see here. And this is new. You know, $50. You can buy this right here, $50. You know, on acrylic on canvas. That's dope. It's dope. These are all her prints that she has here. Let's see here. She has some limited edition prints as well. Okay. Now, if you want to contact her, you can also contact her on her page. This is her website here, artvibesonly.net. And again, this is some of her limited edition prints right here. And if you want to get in contact with Miss Jasmine to get some art from her, you can contact her on Twitter, Instagram, and Facebook. She does have, looks like she does have a art show coming up, or actually that just passed this last July. And she has been in some news articles on Canvas Rebel. Okay, that is a publication that highlights, you know, a publication for artists as well, etc. And this is her Twitter here. You can pull up her Twitter, and as she said, she has commissions closed right now, but you can purchase some of her work on her website right here, artvibesonly.net. Okay, so all right, let's give a round of applause for Miss Jasmine. All right, give her some cheering. There you go, Miss Jasmine. So you guys reach out to Miss Jasmine and buy some of her artwork, okay? And tell her that you've seen it on the Crypto Hangout Network on the Sunday Night Hangout. All right? So let her know that you guys, that cryptocrane on the Sunday Night Hangout, sent you guys over there to her. And follow her on Twitter and purchase some of her artwork, all right? So now, as always, this part of the show, we are going to have some Twitter news, right? What do we go to? Always, middle of the show, being 40 minutes in, the Twitter news. All right, so just coming down and scrolling on Twitter, I seen this right here. Just wanted to let you guys know that buying things with cryptocurrency is starting to be more easier. As you can see, you have a vending machine here, and he is using his XDC to buy him a Fanta soda. So all you guys, people are telling you that you can't spend cryptocurrency, you can't spend it, you can't spend it, you can't spend it. Show them this video and tell them to shut up. All right? Because he's buying it. What you gonna get, man? You see the name of this vending machine is called iVendPay. You know, something you might want to invest in for anybody that's an investor. You know, something you might want to look into. Hint, hint. So it cost him 34.62 ecstasy, right? It got his payment, and now he's got his drink. Fanta Orange, Twitter news, okay. Now, let's see here. This was a chart here that I, came across on here. It's called the, what is it, the Arc of Doom, I think it is, or Dome of Doom. Yeah, Dome of Doom. It shows the breakout in bull market to come, or dump to, breakout in bull market. It says, is it going to be a pump or is it going to be a dump to 12K? Remember, Fed pivots with SPX below. Its 3-year moving average have led to further losses in the past, and cryptos have followed tech stocks so far. Exactly what I've been telling you. It's been following the stock market. All right, so let's take a look at the this right here. As you can see, it has the little arc test, and each time it tests the arc, it falls back down. You have 1, 2, 3 tests, and it falls down. You have 1 test, falls down. 1 test, falls down. Test, fall, test, fall. And now it's testing now, so I expect another fall. I don't expect it to break out just yet. All right? That I don't do. I don't expect it to break out just yet. So I wanted to show you guys this right here because trading in crypto is, trading in general is about patterns. Okay? Patterns and finding the correct, pattern, finding the correct information to make a trade or whatnot. All right. So I thought this was interesting. I wanted to show you guys this right here. And so, like it says right here, it's attempted breakout, but in my opinion, it's not. It's going to fall down to 12 because I told you guys the bottom of Bitcoin is going to be somewhere between 7K and 12K. I mean 7K and 15K. I've been telling you that. Whenever you see XRP get close to 21 cents, that's when the bottom of Bitcoin is going to be. The bottom of Ethereum is going to be between $408 and $450. All right, that is what the bottoms are going to be. Don't ask me how I know because I won't tell you. All right, moving right along here, we have breaking news. The Swedish, Norwegian, and Israeli central banks have launched a project with the Bank for International Settlements to test digital currency payments using central bank digital currencies. Here it comes. Now, I showed this here to show you that no matter what the FUD that they are saying, no matter what they're pushing in the news, they are behind the scenes adopting cryptos and blockchain technologies and trying to make it to where they can accept payments and etc. Okay, because they just don't want to be left out in the cold. That was the whole entire thing. They don't want to be left out in the cold. They want to maintain their dominance. They want to maintain their their being at the top of the food chain, all right, of the financial industry, so to speak. All right, now here I wanted to show you guys this right here because you guys don't realize how bad that the United States debt bubble is. Okay, so I definitely had to show you guys this. So we're going to replay this. We're going to listen to this right here.
There was a time you went to college campuses and you talked about an equity and debt. I think in this case it wasn't necessarily Fed-induced, but it was entitlement induced. And it could come, this was 10 years ago, and I think you said sometime between, you said 2020 and 2035. No. So it's 2000. Is it 2022? Is it happening?
We are in deep trouble. So everything I said at those colleges is worse in terms of the metrics, except for one thing. And what I miscalculated was I didn't calculate zero rates. I used 4% rates. But the only thing Donald Trump and Hillary Clinton agreed on in 2016 was don't cut Social Security, don't cut entitlements. So nothing was done. Joe Biden has excoriated Rick Scott because Bear mentioned maybe we shouldn't be increasing the senior pays. But if you look at the reversal I just talked about, and you use the CBO estimate, which is rates of 3.8%, which I think frankly is pretty optimistic, given all the things we've talked about. By 2027, the interest expense alone on the debt eats all healthcare spending. By 2047, it eats all discretionary spending. So we're now getting into fiscal dominance. By the way, by 49, it eats all Social Security. We're getting to the point now where the interest expense on the debt is so high that it's going to eat up our ability to basically service the next generation. I'm not even sure about the current. I brought some cyanide if you want.
No, I'm thinking about that, and I'm thinking maybe we'll be okay. But
Now, put that in perspective, all right? So no matter what you see in the news, no matter what they tell you, think about what he just told you, all right?
yeah,
Because we'll be dead.
yeah, that's what I mean.
No matter what they tell you, no matter what they push in the news, think about what he said. And that right there leads me to this right here. Okay? That right there, that right there leads me to this right here. This very next one. So what do we have here? The Bank of England, right? The Bank of England, Europe. I was told once you hear Europe falls, you have 2 weeks till America falls. Once Europe falls, you have 2 weeks till America falls. Okay? That's what I was told, right? I have multimillionaire friends, okay? And they have told me some things because they can get into places that I can't. All right? One thing that multimillionaires are going to do is protect their money as well as billionaires. I even have a billionaire friend. They're going to protect their money. All right? So when they talk about their money, I listen. All right? So we're going to go into what's going on with the Bank of England.
With a rather extraordinary statement
Start it off.
from the Bank of England just now, Jane, with a rather extraordinary statement saying that they are planning a gilt market operation, which is an intervention from the Bank of England, they say, to try to restore orderly market conditions. Let me just read out part of this statement, literally just in the last few minutes from the Bank of England. They say, as the governor said in a statement on Monday, the bank is monitoring developments in financial markets very closely in light of the significant repricing of UK and global financial assets. The repricing has become more significant in the past day and is particularly affecting long-dated UK government debt. Now, what they're talking about there is essentially part of the thing we've been talking about recently, the yields on government debt, which have spiked up to the highest rate that we've seen since the financial crisis. The statement goes on, were dysfunction in this market to continue or worsen, there would be a material risk to UK financial stability. This would lead to an unwarranted tightening of financial conditions and a reduction in the flow of credit to the real economy. So essentially saying that this could, well, we're already seeing it, aren't we? You were just talking to Ian about this, the fact that mortgage lenders are pulling some of their products because of what's happening right now. In line with this financial stability operation, so the bank...
Mortgage lenders are pulling some of their products over there.
Has two roles here. They have a role of dealing with what's going on on the monetary side, that's interest rates, and financial stability as well. So making sure the market can function. The bank stands ready to restore market functioning and reduce any risks from contagion to credit conditions for UK businesses and households. This is the key bit. Sorry, I'm reading this out because we have literally just got it. To achieve this, the bank will carry out temporary purchases of long-dated UK government bonds from the 28th of September. So that's what they are planning to do. Obviously, that's from today. The purpose of these purchases will be to restore orderly market conditions. The purchases will be carried out on whatever scale is necessary to affect this outcome. Whatever scale is necessary to affect this outcome.
Whatever scale is necessary to affect the outcome. So if we got to restrict you from taking your money out, if we got to do, whatever to restrict the outcome, different outcome.
Indemnified by HM Treasury, so it's been coordinated with the Treasury. I could go on, but that's
coordinated with the Treasury.
Part of this statement. This is not quite.
Gilt market operation, it says it's monitoring developments in financial markets very closely. All right. Now, I just seen this today, and I had to incorporate this right here because for the simple fact, like he says right here, it says listen, and I want you to listen. I want y'all to listen closely. Listen closely to this. SEC. Janet Yellen speaking about a World Bank evolution roadmap. I and world leaders will call on World Bank management at the annual meeting next week to develop a World Bank evolution roadmap by December of this year. Hear it out the horse's mouth.
Current challenges are urgent, and that is why I, along with leaders from a broad group of countries, will be calling on World Bank management at the annual meetings next week to work with shareholders to develop a World Bank evolution roadmap by December. Deeper work should begin by the spring. Shareholders will then need to drive parallel, holistic reform efforts across other development banks as well. To accelerate this work, my team will step up our engagement with World Bank shareholders and management, and we look forward to discussing more details on this project in the coming weeks.
So I wonder what they're going to be doing and what they're going to be discussing in the coming weeks about this project. I wonder what they have in store. All right, I wonder what they're going to do, because we all know that they want a central CBDC, central bank digital currency. We all know that they want control. They want the blockchain technology, but they don't want the actual cryptocurrencies, because they want the control. They want to have access to control everything that you do, and they don't want you to have no privacy. As you heard the WEF, the World Economic Forum, and Klaus Schwab tell you, you will own nothing and you will be happy. Only way they can do that is for you to have control over your finances. In order for them to have control over your finances, they have to have everybody use the central bank digital currencies and try to regulate or outlaw any competitors. Hence the other cryptocurrencies, hence the regulation. All right. So this right here had just came up right before the broadcast, and I wanted to bring this to you. So I just wanted to show you guys this right here, because this is, makes me wonder to think and wonder, like, what the hell do you guys have planned? What are you trying to do? Okay. Now, we had some more news right here on the British pound. It says the pound's crash will make inflation worse and push interest rates higher. So in turn, what do you think the United States is going to do to try to keep the dollar from crashing? That is why they are pumping their dollar, which is causing the rest of the currencies around the world to crash and to fall as well. Okay. Now, more about stock market crash. This right here is an article about how to take advantage of a stock market crash. All right. It says usually a stock market crash is defined by a drop of at least 10% on a stock exchange or a major stock index within a single trading day. All right, it says characteristics of a market crash: a drop in share prices within a short time frame, increase in margin call for investors, negative market sentiment, decline in major stock indices such as Dow Jones Industrial Average, S&P 500, volatility within other financial markets as secondary effect. Okay. Now, a stock market crash. Warren Buffett said, "With his blood on the streets, you buy." I agree. So if it crashes again, which I speculate, in my opinion, and which is not financial advice, then I would buy. Okay, right now I'm currently DCNA, dollar cost averaging in, buying some here, and if it falls some more, buy some more, and saving my very big buys for this next crash. All right, so that's how you do that. Okay, that's how you take advantage. That is how you take advantage of a market crash. All right. So, again, we have here, like I said, currencies around the world are tumbling except for Bitcoin. Cryptocurrencies. Remember what I told you about 10, 15 minutes ago. Once all those currencies fall and that switch gets flipped on for the Great Reset, all the money that's left is going to be flowing into cryptocurrencies, and Bitcoin will be one of them. All right? So that is something that you guys have to be aware of, and and understand. Okay. It says we know we've reached a unique time in history when Bitcoin suddenly is less volatile than fiat currencies. Less volatile than fiat currencies. Let that sink that in. Less volatile than fiat currencies. Bitcoin suddenly is less volatile than fiat currencies, said the founder of Northman Trader, a markets research firm. Mr. Heinrich is one of the most prominent bears during the recent bull market, warning about overpriced assets like crypto. When crypto banks raised interest rates, Bitcoin largely traded like risky assets, such as tech stocks, but that hasn't necessarily been the case over the past month. Bitcoin has traded in the green, but so far in September, while the tech-heavy NASDAQ is down nearly 10% over that period. All right. But zoom out further, and the picture looks more frightening for crypto bulls. Bitcoin has lost more than half its values in 2022, far underperforming stocks, bonds, and most cryptocurrencies, which is true, and which means that it is a good time and good opportunity to buy. With that being said, what are Bitcoin whales doing? They are accumulating Bitcoin at the current prices. Why? Because I told you it's a good time to buy, right? Because you buy when there's blood on the streets, and then when it's cheap, when it falls, when it crashes, and then when it goes back up, you sell. You sell, you sell, you sell, you sell, you sell, right? Get your profit, get your gains, and then you walk all the way to the bank. But see, what the average people do, they don't research the coins or stocks, okay? Then when there's hype, it starts to pump and moving. Then they buy because all the hype, the news is talking about it, all the friends is talking about it. But it's too late then. Then they get mad and be like, well, the stock market is you can lose a lot of money for stock market. Stock market is for cheats. It's for this and that. No, you just don't know what you're doing, and you keep buying on the hype, and you're not doing your own research. You're not looking into the coins. You're not seeing what utility. You're not looking at the stock. You're not looking at the news. You're not looking at the partnerships. You're not looking at any of that. Okay? Because guess what? These guys are doing? They're accumulating. They're buying. They're buying, and they know they're not just buying any cryptos, any stocks. They are researching and they are buying the stocks and the cryptos that have utility. Okay, they can further the world. They can further technology that has a use case. All right. Everything that you're seeing is FUD, man. It's just FUD, big time FUD. Those that are doing the research, they know and they understand what's going on. Bitcoin whales are again accumulating Bitcoin, with more and more traders now asking themselves what these whales know that the rest of us don't. That everything that what you seeing in the mainstream news is FUD, is bullshit, is BS, is them trying to stop the average person from getting into the crypto market and possibly getting rich and retiring and getting generational wealth. That's what they know that the majority of the people don't. According to data from the crypto analytics platform Sentiment, the so-called Bitcoin whales, defined as wallet addresses holding between 100 BTC and 10,000 BTC, have added a total of 46,173 Bitcoin to their holdings since September 27. So since September 27, 46,000 Bitcoin have been added to people's wallets. They've been buying Bitcoin like crazy. That's crazy, man. That's crazy. And I had a coworker come up to me the other day. It was like, "Hey, man, I heard that that you're in the crypto, you this and that." And I was like, "Yeah, man, I'm in the crypto. But you want to know about it? You want to learn about it? I can teach you how." "Oh, nah, man, it's a scam. It ain't gonna do nothing. You can't even use it to buy anything." I just laughed and kept on going. Just kept on going. Didn't even, I don't even want to talk to those type of people. Don't even want to argue with them. In a tweet published earlier this week, Sentiment called the increase a sustained accumulation by whales and noted that this has been a rarity in 2022. The firm added that the increase in Bitcoin holdings has come as large holdings of the stablecoin Tether have dropped. All right. So, in this tweet right here, it shows, the Tether whale supply rising and the Bitcoin whale supply falling, and the opposite. In the red right here, and this is the green is the opposite. So this is what it's showing, the indice. It says, meanwhile, that the news that whales are now accumulating Bitcoin comes after Sentiment in late September reported that the whale holdings of Bitcoin had dropped to the lowest levels in months. So now they're accumulating. All right, they sold some, and it fell. And then they bought back into it. That's exactly what happened. That's what smart traders would do. Okay? If you're a trader and you're a smart trader, that's what you're going to do. So, I really just want you guys to understand, the implications of what's going on here, so you guys can make the best possible decision that you possibly can when it comes to this crypto market, because there's a lot of things that that are happening. A lot of FUD, a lot of people that are don't know what they're talking about. They're not doing the research. A lot of people that are following others as well. All right, so I appreciate you guys for joining with me, for watching the video, for staying tuned to the whole entire video. I appreciate all my live viewers and all our subscribers that are on the Crypto Hangout Network that are subscribed to the channel. And don't forget, you can find the our podcast on the Spotify network, on the Pandora, Amazon, Sirius XM Radio, Apple Podcasts, and any other podcast platform or platform that you can find podcasts on. You can find us there. Just search for the Sunday Night Hangout or search for the Meta Spot, which is our podcast focused on nothing but metaverse, where we bring to you the exclusive metaverse news and interviews, all things metaverse related. All right, so thanks again for everybody that tuned in. Go ahead and hit the subscribe button. Follow us on all our platforms. You can follow me at CryptoCrane 2 on Twitter. You can follow the Crypto Hangout Network on Instagram, and the Crypto Hangout Network group page on the Facebook group. All right, so until next Sunday, Crypto Crane is signing out. Peace.